Well, hello, active traders, and welcome to How to Improve Your Trading. I'm Ken Calhoun. I'm joined by my longtime, the great Rob Booker. Rob, it's great to have you with us here tonight.
Hey Ken, I'm super happy to be here. Thanks for having me.
Yeah, Rob's one of the best guys out there. Absolutely check out his YouTube channel. It's one of my favorite top three out there. He's a really friendly, nice guy, and he knows what he's talking about. So a lot of good content. It's always all information's for educational use only. So let me turn it over to Rob. Rob will be speaking the first half hour, and then I'll be doing the second half hour, and I'm looking forward to seeing what Rob has to present here. Let's get this going, and we should be in good shape.
There we are. Hey everybody, super excited to be here. Thank you again, Ken. You've been a friend for longer than I even want to say now because I can't believe it's been. I still remember the first time I met you at a Traders Expo, and you were just on fire, and you have such a passion for not just the industry or for traders or the markets or whatever, but just people. You're just a great people person and just a good person. And I am so always excited to hang out with you and be here together with you and share a few things that I'm working on. And I thought what I might do tonight
Well, thanks.
is,
Appreciate it.
no, I really appreciate you. And that's the most important thing I wanted to say to start things off. So if you're here and you know me, but you don't know Ken, you're in good hands, no matter what he offers or no matter what he does. I think you're better off always taking advantage of that. And Ken and I share a belief that if you know how to do something, you should share it openly and you should share it with as many people as you can. And the money or the accolades or all of the other secondary things just don't matter as much. And I know that's important to him. It's important to me too. And so I put a lot of time and effort into my YouTube channel, which you can see on the screen right here. And you can easily find me at Rob Booker Trading or just Rob Booker Trader on YouTube. And warning out there on Facebook and on WhatsApp and on Instagram and all the social medias, there's always someone out there impersonating me and pretending to be me. And I will never ask you for money in a direct message or ask you to invest capital in an account management program or on a website forum or whatever else. I never ask for that ever at all. So just be on the lookout for that and make sure you keep your eyes open and don't ever go for anything like that. What I wanted to do tonight is share a few things about the way that I am planning and taking trades and sort of give a look into or a preview into some stuff that I'm working on that I do teach. I teach it to a group of traders I call an inner circle group of people, and we spend some time talking about this stuff day to day. But I really don't talk or go really this deep into the weeds as much anymore. So if it's okay with everybody here, and I'm sure it's okay with Ken, I just want to kind of geek out on some technical stuff. And I always know that if I do a webinar with Ken, I can do that. And I'm not gonna be speaking to people who either don't care or don't want to know or whatever else. So let's do that. So I have a few trading accounts, and I'll walk you through each one of those and the purpose for each of those. I don't trade stocks as a primary means of income. I do trade currency for that purpose, but I do love to trade stocks, and I'm going to show you kind of how I do it and the way that I set things up tonight. And then I also use a robot to trade the currency market, and that's the primary method for which I trade. But I'll get to that in a second. I just wanted to show some things that maybe not everyone talks about all the time, and here we go. So this is plain old tradingview.com chart, and I'm going to walk you through some indicators that I use tonight and some ways that I set some things up and some ways that I look at things, and hopefully you'll find some value in that, and I think you will, but feel free to stay in touch with me and follow me on the YouTube channel or send a question. I'll give you my contact information so you can send me a question later on. On the chart in front of us right now, you see a bunch of red lines and some horizontal blue lines, and you see some dots above the candles and some arrows and some divergence lines. And I'm going to go through and eliminate everything and then bring it back on as I think it will be useful. And I want to start off with just these dark horizontal lines that you see on the chart right here. And this is not, happens every single time I do this. Here we go. So this dark line right here in the chart, that is a monthly pivot. And a monthly pivot is calculated by taking last month's high, adding it to last month's low, adding it to last month's close, adding all those numbers together, and then dividing them by 3. There's a beautiful, beautiful thing about pivots that if I just delete this pivot from my screen, this is the greatest thing. I just love this so much. I know it's a complete geek thing, but it's so easy to bring pivots on your screen, and you don't need to buy a pivot indicator. They're free on every charting platform in the world. NinjaTrader, Thinkorswim has pivot points. TradingView.com has them standard. They're downloadable and free on MetaTrader. And if you're having any trouble finding pivots, you could just type in Rob Booker pivots, and pivot points indicator is one of my videos on the YouTube channel. You just pop up that baby, and there's a link to a free download for a bunch of platforms. So if you can't find that indicator, you just go ahead and I'll get it in your greedy little pivot point desiring hands. So I pull it up here and I go to the monthly pivot. I always try to color it purple, but every once in a while, like you saw in my chart earlier, it changes color because I'm working on something. So there it is, the monthly pivot. And there's something unique about pivot points. And I'm going to share the simple truth, and then I'm going to go into a more complicated and interesting, I think, interesting presentation about them. Almost every single pivot point, whether it's a daily, weekly, or monthly pivot point, is hit by price, touched by price, not even just one time, but multiple times. And over the course of a month, a monthly pivot acts as sort of a middle zone or sort of a natural state or a home base. And price will reach that home base and then take off from there and maybe then come back or whatever else. But occasionally, in rare circumstances, a pivot point is not hit by price in the month that it's created, or in the day that it's created, or in the week that it's created, in the case of daily and weekly pivots. So if you start from that idea, you realize that a pivot point is a magnet. And if you run the statistics, 85 to 90% of all monthly pivots are hit within 4 months of their creation. 60% of them are hit the same month that they're created right away. And then occasionally a pivot point is missed. And then within 4 months of that time, price must generally return to it. And we don't have to bother with running those statistics on a webinar, because you can do the following. You could plot the monthly pivots, or you could just plot the daily pivots, and you could just visually confirm that what I just said is true on any old stock that you want to look at, any old currency or futures contract. Maybe you want to look at oil. So maybe we go over here to futures and we look at oil. Oil's going to hit almost every single blue daily pivot, and it's going to hit almost every single purple monthly pivot. And every once in a while, it's going to miss one. The market went crazy, and every once in a while, it's going to miss one. And sometimes it's even going to miss 2. But generally, it's just going to miss 1 at a time. And it's going to hit almost every single daily, weekly, and monthly pivot. You could just count them up on your own screen. You can run the numbers. This discovery is not the most important part of this webinar, but the story behind this is that my friend Gary Fluker, a hedge fund manager out of New York City, came to my office in 2007, 12 years ago, and his wife for his birthday bought him a plane ticket and a hotel to come out and see me, and called me up and said, hey, Gary's going to come out and see you, and he really wants to work with you. And he brought his Bloomberg terminal and spreadsheets, and we did the math. And you can calculate the math, and you can find that out as well. And it's so cool. And here's what I mean by that. When you have a monthly pivot that has not yet been hit, like in the case of Applied Materials, Amat, right here. If you have a monthly pivot that has not yet been hit, you can plan a reasonably high probability trade. Past performance is not necessarily indicative of future results toward that monthly pivot. And today, what I want to show you are a few techniques that I've used quite successfully to plan and take those trades. So I'm going to add to the chart, well, I've already done it. I'm going to add the daily pivots. And the daily pivots are in blue. So these daily pivots are in blue, and they're right here. And you can see each one of them lasts for a 24-hour period of time. That's a daily pivot, each one of these, and most of them are hit by price. But some of them are missed, as we talked about. Now, what I've also done inside of the pivot point indicator is I have instructed my charting platform to also show what is referred to as the R3 level and the S3 level. R stands for resistance and S stands for support. Now, what I look for is really simple, really easy, and super effective. When a monthly pivot has been missed, and it is getting toward the end of the month, past the 25th, all the way through the beginning of the next month, first 4 days of the next month, and a currency has its monthly pivot that is missed so far, has not yet been touched by price, or a stock has not yet touched its monthly pivot, and it rises to hit this R3 level, but not on the, not on the 17th of the month, but I'm talking about the 24th, 25th, 26th, all the way through the 30th or 31st of the month. When it hits R3, that is go time on building a position. And I'm going to call it a big trade. It's time to plan a big trade. It's time to plan a monster position. Not in terms of, over leveraging your account or going and taking out a second mortgage. None of that. It's time to start planning that trade. And I want to walk you through one example, because I'm confident that once I show you one example, I will leave you with tools to find many, many other examples. But we'll walk through one example, and you can learn these steps accordingly. Now, this is an example of a short, but it could be an example of a buy trade as well in reverse. And we can look at those examples as well, but I want to start off just planning this one out and showing you what this looks like, and telling you what I would exactly do in order to take a position like this. So we hit R3, and it's the 24th of April, and I want to immediately look into buying puts. Or if I'm a stock trader and I want to trade shares, I might short this stock. I might take an initial probatory, exploratory, discoveratory, those are all made up words except for one, position in this, just one exploratory position. If this is a futures contract, I might short it. And if this is a currency, I might just press the sell button and go short. It's why I love the currency market so much. And I might then also draw a trend line underneath recent price, and I might wait for price to break below that trend line and then retest it. Now, this is called, this is called a throwback, pullback. I think my friend Martin Pring calls it a throwback. Other people call it a pullback to a trend line. I call it a Winnipeg special. And I think every time I do Winnipeg, I spell Winnipeg wrong. But I got so interested in this that, it's a long time ago now. It's probably 14 years ago. I made t-shirts on Zazzle, and I literally created a t-shirt that was called the Winnipeg special on Zazzle, and you could actually still buy this t-shirt when you find it online. It's like we'll look at it later, but it's pretty stupid. Anyway, so I called it the Winnipeg special because I taught an entire seminar about this, And I got so excited, and I printed up the t-shirts, and I spelled Winnipeg incorrectly. And the reason I called it that was I was doing this live seminar about trend lines and pullbacks in the province of Winnipeg in Canada, in Alberta, or whatever it was. Or no, that's in Calgary. Anyway, Calgary's in Alberta. I was in Winnipeg. I was in Winnipeg, which is Manitoba. I got it. I remember now. I was in Manitoba, the province. I'm not from Canada, and I was in Winnipeg. And so that's a pullback to the trend line. And that's another place to take a trade. Now I want to show you another indicator, and I want to add that on top of things. Let's do exhaustion bars or candles. So here on the 15-minute chart, after we've hit R3, a price pattern emerges. Now, a lot of you are familiar with, if you like price patterns, and you can use any one of these or none of them or all of them, but you can see that this is one of those shooting stars or a small candle body with a really, really long extended shadow. And you can get into the technical mumbo jumbo, and you can go deep into that, or you can just have your charting platform plot those for you. So every single charting platform on Earth that allows for custom indicators has a downloadable indicator that will show you price patterns, candle patterns, engulfing patterns, dojis, emojis, which is a hammer and a doji mixed together, which I just made up and doesn't exist. Each of these methods that I've just shared with you are good reasons to create or begin an exploratory position. And if the market agrees with you, you take that a step further and you let that go a little bit more. So what I'd like to do is maybe take a look at, I don't know if we have a, I'm going to pull up a couple charts, and I'm not sure. See, the market's been going up for so long in the same direction. It's hard sometimes to find examples of monthly pivots that were missed. But this is kind of what it looks like. This is Disney almost missing its monthly pivot. Well, you know what? We're going to go ahead and use this as an example because I don't want to spend all night just looking at an example. And so here's an example. This is the Walt Disney Company in December of 2018. And you can see here at the end of the month, S3 is hit at the end of the month. So it's past the, it's in the later stages of the month. It hits S3, and then you can use, let's just check this out. Let's go to December 20th, 2018. And there it is hitting S3. Now that's on the 21st. I'll take it. Sure. I don't think money is made by being exact. I think money is made by controlling risk. So it hits S3, prints an exhaustion bar or candle, small candle body, giant or longer candle shadow, breaks a trend line. Any number of these things hitting S3, printing an exhaustion bar or candle, breaking above a trend line and then floating back toward it on a throwback Winnipeg special. All really good reasons to initiate or start to accumulate a buy position. Now, I don't really even, like I said, I don't even trade Disney. I don't think I've ever taken a trade on Disney in my life. I just wanted to pull up something at random to see if that theory proves itself to be true. If you look at IBM in the later stages of a month, the 25th of February in 2019, hits R3 or gets close to it. Let's see if there's any other monthly pivots missed, just on something like IBM. This is the end of the month. It's missed the pivot, but there's no, at the end of the month, there's no bars or candles that we could use. But you get the idea. As many of you know, I trade mostly the currency markets, and we could look at that for a minute. And then we're going to take a look at another indicator. So I'm going to pull the daily pivots off for just a second. Go to a longer term chart so we can see if we can find a missed monthly pivot. There we go, that'll do. There's a missed monthly pivot almost. Oh, there we go. Holy smokes, here it is. May of 2018. I just wanted to show something that comes from the buy side of the market. So I'll tell the charting platform I want to go to. May of 2018. We'll put those pivots back on there. So there we go. We're in May of 2018. We've missed the monthly pivot all month long. It's the 29th of May. It's a British pound US dollar. It hits S3. Draw a trend line across our bars or candles. And it doesn't print an exhaustion dot until later on, but that's fine. And then we get some movement upward. Now we don't need a profit target all the way at our missed monthly pivot. We don't need that. What we need to do is just make more money than we've risked. Stop loss goes below the lowest low that price made, and a profit target could easily go at the nearest available monthly pivot, either the most recent one if it's rising fast, or the new monthly pivot that is in existence right over here. All right, so that's the beginning. That's before we move on. That's before we sort of take this another step further down the rabbit hole, so to speak. Because what I want to show you is something that I've believed to be true for a very, very, very long time. And it's a fun way to look at the market, and it's kind of a geeked out way of looking at the market. So on my chart here, you will see a variety of different financial instruments with a billion green and purple lines above and below. And what I'd like to do is show you what these are. This is a missed pivot point indicator. And this missed pivot point indicator, when shown, will just only show us all of the missed monthly pivots below and above price. And I want to show you the Euro Turkish lira today because, oh wait, it's probably a profitable trade. I shorted the Euro Turkish lira today. I began a short position in this because I earn interest on it as I trade it. But look, it's only got one missed monthly pivot left to hit. And then after that, it's got a ton of monthly pivots below. And if you think it can't go there and hit those, then you got another thing coming. It most certainly can. Euro yen. Oh, I have all these trend lines on the euro yen. The euro yen, on the other hand, doesn't really have any missed monthly pivots. If it has any at all, it's just above where price is right now. That's not really that interesting. So I can automatically sort of just simply exclude the euro yen. I can look at IBM and I can say, is this really an interesting financial instrument for me to trade? It's got sort of an equal number of missed monthly pivots above itself and below itself. No, it's not really that interesting of a trade. And I can scan through my charts and I can look through and see if I can find a maximum number. I don't know if I can go 1,000 days back. Nope, I can go 730 days back on this chart. So I don't really see in the last 2 years, I don't really see a lot of monthly pivots that have been missed. And so this doesn't interest me as much. And so when I'm scanning through financial instruments, what I'd love to see for really, really, really big trades, like the giant ones, I love to see lots of missed monthly pivots above or below price. Now I could also take this down to a 1-day chart or I could even go down to a 240-minute chart. And I could just show on the screen the missed daily pivots. And I'm still not interested in Groupon. Maybe Tesla. Look at all those missed daily pivots above where we are right now. That's pretty incredible. That's pretty spectacular. I gotta say, that's That's pretty fantastic. At some point in time, statistically speaking, price wants to return to these levels. Now, you may not think Tesla's a really good buy, and you may think that Tesla fundamentally is a garbage stock, or whatever. It's really popular to it's really popular to be critical of certain financial instruments. But remember, the market doesn't care about individual people's opinions about a stock or a currency. It cares about statistics. It cares about what's likely to happen. It doesn't really care about, whether somebody on TV doesn't think Tesla's a very good investment. You can see here Tesla at the end of April hit S3 on a daily pivot situation, printed a ton of bullish exhaustion price patterns. I love the 15-minute chart, by the way. And then not long after, broke above a trend line. And then it rose and hit the new monthly pivot. That is a textbook example of everything that I like. I like Tesla. I like the company. I understand its problems. I think that it's got a really tough road to hoe ahead of it and all of those things, but I like it. And I loved it at this level. And then you're out in the market for 1, 2, 3, 4, 5 days. And once again, that could be a currency, that could be a stock, that could be a futures contract, that could be just about anything that you could ever possibly become interested in. Let's look at the Euro Turkish lira. Now, nobody thinks this is a great trade. Like everybody that I know thinks that I'm the dumbest person in the world for trading this financial instrument. But here's what I see. It left last month's pivot, continued up like a rocket ship. It hit, in the beginning days of May, it hit R3. I took a small position here. I didn't wait for the trend line break. And then today, when it hit R3 again, I took another position. And tomorrow, if it is still below this trend line here, I will wait for it to rise back up and hit that trend line again. And then I'm going to sell it again. And every single day that I hold this trade, I not only make money from holding the trade if it's going in the direction I want, but I earn interest on this trade. Now, the Euro Turkish lira is perhaps in the universe of all risky assets, currencies are the riskiest. And of all the riskiest currencies, the Euro Turkish lira might be the riskiest one of them all. So I might be trading the world's riskiest financial instrument. And at any moment in time, this could fly upward by thousands of pips. And once again, I don't care about that. I care about statistics. I care about the probabilities that what this is going to do is it's going to be a nice trade. So this is up, all told right now. It's up $133.07. So it's nice, That's not a bad little trade there that has potential to just be so much more substantial than that, with the stop loss just above these levels right up here, floating in outer space. I would love to converse with you. I'd love to be in touch with you. You can find me at youtube.com/RobBooker. That's the first place to find me, and comment on some videos and say hello. That's a great place to reach me. That's a spectacular way to find me and to stay updated with what I'm doing. I sometimes publish stuff every day. Sometimes I publish stuff every week. You can also find me on Telegram Messenger at t.me/RobbieBooker. And, at the end of this session, sort of my call to action is, hey, hit me up. You got a question about what I shared, or you want to follow up on something that we talked about tonight? Send me a message, t.me/RobbieBooker. or youtube.com/RobBooker, and follow me and stay in touch with what I'm doing. And every once in a while, I sell a class or do a class about something, and you'll hear about that too.
All right. Well, thanks so much, Rob. That was fascinating. It was I was taking mental notes here about the pivot strategy. I like the idea about missed pivots. I think there's a lot of good common sense in that in terms of price projection and how things move. So well done. And I highly recommend Rob Booker. He's one of the best guys out there and one of the nicest guys, and he really knows his stuff. I watch his YouTube channel every single week. I always watch at least 1 or 2 episodes. It's one of my favorites. So thanks, Rob, for being here. Appreciate it, man.
No, it's my pleasure. Thanks so much.
Hey, well, I'm Ken Calhoun. I wanted to welcome everybody to tonight's live event. Great to see a big turnout as usual, and I'm glad we got the technical gremlins taken care of. Kind of like the great series Game of Thrones. Winter's coming, and we got to fight off the bad guys. Hey, I want to show you some real money trades. So if you would type in, this is audience participation portion of tonight's event. Type in the word day or swing or both. Depending on what kind of trader you are, and I will on the fly here adjust the types of charts that I cover for you. I did 45 trades today. I'm a maniac. I'll show you proof. I got my P&Ls here from my trading account here to show. I wanted to thank all of you who had voted me the #1 author in the world for stocks and commodities. For any of you who voted for me, I really appreciate it. That's what I look like in front of my monitors. Rob had asked me to show a picture of my monitors because he was curious about them. Me too. I always like seeing other traders' workstations. I like the whiteboard he uses. And anyway, that's my professional layout. You may have seen me speak at Money Show Traders Expos. I've done as much as 4.9 million, almost 5 million worth of trades in a single year. So I'm the real deal. That's tax return proof. How to improve your trading. And that's it for the PowerPoint slides. Let's get on with it. We've got a hammer at a 50 SMA in the S&P, so we may get a pivot. Was anyone trading Roku today? Roku is the best chart in the whole stock market. Schwang, I called it long for my live room members. I think it was 73.40. What a run, right? What a run. 70 to 83. One of the first things that you can do to help improve your trading is only trade things that are up in the clouds or the gap continuation. So anything that has a minor gap that continues on up is usually a great candidate for trading. My biggest stop losses, and I take them every single day, I make bad trades as well as good trades, are occurring when I'm trading inside the previous day's range. Okay, or if I'm trading consolidation zones like I was trying in TVIX. I knocked TVIX out of the park today, trading on the way up, but I got stops not on this way, but here trying to play bounces. I made a winning trade or two here, but TVIX has been a spectacular monster of a runner today. For those of you who like to look at P&L proof, notice please support is right here at 29ish. I was buying this guy. These are my real money trades in my real money Fidelity account. I was buying it starting at 28.88 pre-market. I added 40 shares at 29. I've been buying and selling this thing all day long. And here is real money trades from me, a real trader. I am a freaking maniac, right? Let me give you a quick bit of coaching advice, okay? Put on my coach's cap for just a minute. And that's long enough for that. I like fedoras, but I'm old school. The point is, from a coaching standpoint, what you guys got to do is trade wide, not deep. And like Rob wisely used the phrase like exploratory or testing small trades, that's what I do. You can see most of these guys are up to a couple hundred shares, but I'm in and out of these trades with really super tight stops. So when I get stopped out, it's real small. My average stop loss cost of my day trades, what do you think it is? You can tell how good a trader is by how small their stops are. Size matters. The other way. So my average stop loss cost is around $24 per trade. So that means on 100 shares, I use a 20-cent stop. On 200 shares, I might use a 12-cent stop. So in the $20-ish range for my stop losses. I made $450 in TVIX on the way up today, and it's really cool. I gave back a lot of it trying to overtrade the close in case it came back to life, but volatility in instruments that have really especially strong patterns is one key to success to improve your trading, along with tight stops. So these are the kind of charts I like to trade. like PPC. Does everybody see why that chart makes sense to trade? It's got a range all the way from 21 to 28. In one of my most recent stocks and commodities articles, I posted the fact that the portion of the right part of the chart's more important than the visuals on the left. The range and volatility, the directional volatility of the instrument is more important to look at than just simple chart patterns. Most of you are both. Okay, that's good to see. Wow, big turnout. Epic turnout, guys. Now, do you see why Pilgrim's Pride is such a great chart to trade for a swing trader? Another quick tip. I've been trading for 20 years here, millions of dollars, tens of millions of dollars worth of trades. Some charts that are good for day trades are not good for swing trades, and vice versa. This is a good example of a swing trading chart. This is what I call a acceleration ramp, where you got a steady uptrend that graduates into a kind of like a hockey stick, a check mark, a steady uptrend, and then all of a sudden they get excited. Like, how many of you remember the classic movie Highlander with my favorite actor Sean Connery and whoever played the Highlander? Anyway, it's like the quickening, right? One of the patterns that I favor, that I urge you to look for visually, is this 1-2 pattern, where you got a small or medium candle followed by a large whole row body candle in an existing uptrend, confirmed by increasing volume. So you've got convergence between both price action and the volume are both going up. The trick is look for a minimum of 3 days, 3 sequential days in which both volume and price are going up. And usually you've got the jump on a good continuous play that's a good candidate to trade. So that's one thing that I like to do. Of all the thousands, probably closer to tens of thousands of traders who have trained over the last 20 years, the biggest thing that you guys screw up in is you undertrade and you trade choppy charts with too much leverage per trade. That's ass backwards. So you bet too much on weak ass charts and you don't even trade that often. Epic fail, okay? I mean, you don't have to trade like I do, 40 trades a day. I think I drank too much freaking coffee today. I love coffee. Coffee is a trader's best friend. But I did great. So the point is, what you're looking for as a trader is to trade wide, not deep. Or like my colleague Tom Sosnoff wisely says, trade small, trade often. That's what you want to do. You want to hammer away or grind away at your trades. So you're chipping in and out of your trades the right way. What 8 cups, right, Chris? Yeah. What 8 cups? He's wired. But better caffeine than anything else. So what are you looking for? One of the patterns that I'm always looking for are gap continuations, both for either if I'm day trading small caps or larger caps like Roku, or you're looking for a swing trade. A gap is kind of like a poker tell, and it's a chart that's adventurous. Kind of like, if you remember the movie Indiana Jones, this is my last hat, I promise. Most of my hats are downstairs in my music studio. I mostly wear fedoras, but bum-ba-dum-bum, bum-ba-dum. Trade this, pendejo. Well, what you're looking for is not exciting charts. You want exciting profit. To make exciting profits, you got to play the game smart, and you got to play it wide. You got to play the strongest charts, and you got to chip away at it. Like I was grinding away at TVIX most of today because it was a run-up chart. Just like 2 days ago, if you remember, it ran up 19%. Right? Charts with big ranges are what you want to trade. If you're trading small caps, the secret to trading small caps successfully is trading charts that have consistent week after week uptrends. A lot of traders will trade these pop and drop one day wonders, like, I don't know. Let's switch gears to intraday trade charts. I'm using the old version of eSignal because I've traded so many millions of dollars worth of stocks and ETFs and E-minis and Forex, but mostly I'm a stock trader. Charts that go straight up often come crashing straight back down again. And odds are you're going to be on the wrong side of that, Sparky, so you don't want to do that. Trading thousands of shares of cheap $2 or $3 stocks is for morons. Okay? That's for morons. That's what I call momentum morons. People making phony performance claims claiming, I made $5,000 in a day trading 10,000 shares of a $2 stock. What they do is they'll have a mirror account that they go short in simultaneously that a confederate will put on a trade, and they don't tell their people about it. So they're front running too. There's a lot of BS in the small cap gap and trap type of charts. So you don't want those. What you want is epic charts like I made the call for my live room members today in Roku. How much money could you have made had you bought this here at around 72.5 on a breakout today? It ran all the way to 83, 12-point trading range. That's the thing that dreams are made of. Consistent, strong, no pull or very few pullbacks, and would have been easy to make money with. Now, having said that, what do you think is going to happen with Roku tomorrow? Well, thanks, everybody. Usually a mean reversion pullback and not much of anything. For example, let's take a look at TVIX. It had a really hot day, ran up all day from 20. I was trading this like a son of a gun day before yesterday. This guy ran up from 22 to 28 a share. It was the most heavily traded instrument in the entire world. TVI, look it up. This was number one most active 2 days ago. After a big monster day, usually it's like they take a big breath in, or they're running and they're excited and they shoot, they score, the crowd goes wild. Then they rest on the sidelines. So the institutional trading volume is usually thinner after a big run up day. So much like a gap day, you don't want to trade the day after a gap, and usually you don't want to trade the day after a big run up day because that's usually going to be a frustratingly choppy day. Okay? And it cycles on and off. You know, this is my favorite instrument to day trade because of the volatility. 2 days ago it was 22 bucks. Today it was as high as almost 32. And I told my traders it's likely to run to 32. Then there's don't worry about China news from the White House, and then of course it crashes. It's an inverse instrument, right? It goes exactly the opposite of the spiders. Right, they're inverse. And the exact opposite of TQs. One thing that I like to do often is do, kind of a inverse pattern. Like here's Nugget, the gold long ETF I like to trade. And here's Dust, the short ETF I like to trade. They have exact mirror images. And there's what I call an ETF arbitrage technique that I designed many years ago that I broadcast, and it's on my YouTube channel, where you've got a short ETF and a long bias ETF that trade exactly the same but mirror images. And you can exploit that differential by going, what I'll do is I'll go long above resistance on each of them, and whichever one wins the battle, I add more shares to, and I stop out of the one that's going against me, right? So, for example, I was trading Dust. It ran all the way up here. When it runs up, Nugget drops. And I was trading a bounce. I think I tried a couple of times. I think I got stopped out once and I got a small win in the other. Bounces are usually not the right way to trade unless you've got a pivot off of a major support, you know, like a previous day's low. Or in this case, you can always draw a trend line. And with mathematical precision, you can see that delineates support on a point-by-point basis. So those are the kind of charts. This is our watch list today. Notice, please, that a lot of the inverse, or a lot of the small cappers, like Kronos, it dropped. Bounces usually are not worth taking. In our current market environment, I find that bounces usually do a little bit, if that. I used to love trading bounces back when the market was strongly uptrending, but now, not so much, because I get stopped out more often than not when I try and play a bounce. Or at best, it does a break even, or something not too exciting. So now mean reversion pivots are one thing to look for too. Here's Workhorse. It was one of the most active the last couple of days. This is in the decidedly risky, never would want to swing trade for day trading only type of chart. But it ran up, it pulled back down to around half, and kind of ground sideways. So pretty good chart. Yeah, pop and drop, Chris, right. Glad to see you folks are here. And again, I apologize for the technical hiccup. That's happened twice before, where there's the buttons there. I see you knocking, but you can't come in, baby. I see a button and I click on it and nothing happens. I mean, really? WTF, right? So, emoji, sad face. I've been on Instagram too frickin' much. Anyway, I got on Instagram because mainly because I saw Casey Neistat said, I'm spending too much time on Instagram. And I said, okay, well, Casey thinks it's cool. There must be something to it. So, what the heck? So, it's all good. Anyway, AKRX, look at this, 360 to 480. One thing to look for is both 50-cent support and resistance and whole number support and resistance. Often if you get a bull flag, this is what's called a bull flag. And I prefer these kind of patterns. Come on, you punk. What you don't want to do as a day trader, if you're intraday trading or you're considering a swing trade, is like buy if it's skyrocketing on up. It's going up and up and up and up, because more than half the time I've found in doing tens of thousands of real money trades is that oftentimes following or as part of a sharp move up, you don't know where it's going to keep going. And what you want to do is see it tested by sellers. I sense a disturbance in the force. Bump, bump, ba-dum, bump. May the fourth be with... I digress. You see a punk-ass stock goes up, and you buy it, and it's going to immediately go crash and burn and piss you the F off. You get stopped out, and then it runs up without you. How many of you have ever been there, done that, got that t-shirt? I've done that thousands of times. Really pisses me off. So what I found works better is expect resistance at whole numbers, number one. Expect there's going to be a false breakout above previous resistance, and wait for it. Wait for a pullback, and then buy, like right there would be the inflection point trigger. I think it was, 422, I think was what the call was. So we're right above the having been tested by sellers, and buyers came back in and rushed into it, right? So copy that and got your 6. You're trying to look for charts that are not going to get you torn apart by market forces. So don't chase something that runs up, but never underestimate how far it'll keep running. Wait for a pullback before you get in above the new high. Like we did in Roku today. I made multiple Roku calls to my members today in my live room because that's the best chart in the whole stock market. You've got to have kind of the nose of a bloodhound, or like my colleague Steve Nissen would say, be a market detective. You got to figure out where the money flow is and where's it most likely to continue. Now Roku was a runner because it did a bullish cup following a gap, right? Gap continuations above the cup pattern high from a straight. I'm an OG. My wife would say I'm an otaku. My wife's from Japan. She's great. I don't understand her. We've been together 20 years. The key to great marriage is indeed communication. As little as possible with somebody that doesn't speak English very well. Bada boom. Works for me. 20 happy years we celebrate. So it's all good. Anyway, I digress. Back to it. Hontou ni hai so desu ka? WTF. We got a bullish cup breakout, baby, and it pulled back multiple times. Anywhere in above each whole number is a good trigger point if you're trading. Now, I don't like trading instruments up in the $70 share range. I'm not a cheapie where I love the $2 stocks either. I'm kind of in the sweet spot in the middle. I like $20, $30, $40 share instruments. That's my bailiwick. That's my wheelhouse, is ETFs or ETNs or stocks in the $20 to $40 share range that have at least a 1 or 2 point intraday trading range. Yeah, Vincent, that's Japanese. Quick Japanese lesson. When guys in Japan have a winning trade, they say yosh. On the count of 3, your family will be completely confused. Welcome to my world. I think I'm turning Japanese. I really think so. Ba-dum-bum-bum-bum. For a gold star, who can tell me the name of the 80s band that came up with the song, I Think I'm Turning Japanese? Starts with the letter V. The theme of my life. Anyway, yosh is like F and yeah. Yosh is what? It's a celebratory. The opposite is kuso, which means, I'll be polite, crap. So kuso if you make a losing trade, yosh if you have a winning trade. Absolutely right, Kelly, you got it. It's the vapors. Anyway, I digress. I did my master's thesis on Kaizen after graduating UCLA back in 1986. I'm 55 years old. How did that happen? 55. I'm told I have a youthful appearance. It's because I have a very Asian lifestyle. No booze, no drugs, a lot of rice and fish and vegetables, as you might expect. But I also eat out now and then, so it's kind of fun. But having a healthy lifestyle, as a trader, you want a healthy trading lifestyle. And you want to make as much money as you can. And the way that I have found that, and all the millions of dollars I've traded over the years, is clean charts with well-defined patterns that do what you think they're going to do. Do what you're going to do and live in color, baby. Because that's why I was buying this guy pre-market. I was excited to buy it because it was a gap up, right? No, I was just putting on little itsy bitsy baby trades. But don't laugh, I was up $450 before I sold it at like 31.20. I was a little pissed off when it ran up here because I'm going, and I even told my traders in the room, I was showing them the P&L proof. I was saying, gee, I should have just held on to it. Well, I'm glad I didn't. I sold near the exact top. So that was kind of epic cool. But anyway, P&L proof from, I don't know, today. I was buying at 28.80, 29, buying again higher, sold 31, in and out of this guy all day long. I think I got stopped out at TPR, or I canceled order. Yeah, I don't think I even traded that. I take stops every day. The main thing that you got to do, and I only got a couple of minutes left here, as an active trader, you have to get in the position of where, number one, like Rob had mentioned, you have to know your statistics, meaning you have to know things like average trading ranges. You have to know what the inflection points are that buyers are likely to march in. If nothing else, follow the tape. Follow the tape. Follow the yellow brick road. I love that movie. Wizard of Oz. My favorite scene in movie history is when she lands in Oz and it's this dreary black and white, and then it's all this beautiful Technicolor. That's a big contrast piece in cinematic history. As a trader, you want to contrast between losing your ass and hiding your trading losses from your family. You know who you are. Bad traders. Epic fail. Don't be that guy or that lady. Instead, learn how to trade the strongest charts with tight stops and play it like you mean it, right? You want to crush it as a trader. And if you're going to crush it, that means, number one, you got to master risk management. Really tight stops. That's, if you learn nothing else from me, tight ass like $20, $30 stops. That's how you trade, because you're giving yourself a lot of shots of getting it right. It is infinitely smarter, Grasshopper, to take $10, $20 stops than one $200 stop. Okay? Because you get 10 times as many chances to get it right. Now, yeah, you're going to get beat up on commissions, but big whoop. As a real trader, I'll tell you, it's much smarter to granularize or splinter your trades into segments, like 50 shares here, 100 shares there, 50 shares there, 200 shares there. That's what I was doing here. That's what I was doing here. I even traded I was 200 shares here long, successfully traded yesterday into the close. Whatever you're doing as a trader, look at the difference between what you're currently doing and where more experienced traders do things. Okay? New traders over leverage. They trade way too many shares. If you're day trading and you're learning, you should never trade more than 100 shares at a time. 20 to 50 shares at a time would be a lot more sensible. Trading thousands of shares at a time is freaking madness, and that's for morons. If you've lost your ass trading, it's because you're over leveraging and you're not giving yourself, the law of large numbers, enough chances to get it right. I used to be a statistician for the Ford Motor Company and a nationally certified quality engineer. I'm a former TQM guy. I'm a hardcore numbers man, and as a trader who's traded millions, I'll tell you, you need to adopt a different mindset. Learn from people who know what they're talking about, like Rob Booker. He's really smart. I love his YouTube channel. The guy has tons of wisdom. I learn a lot. A lot of his examples are Forex, which I used to trade. The examples are perfect for any kind of trader. And what you want to do is spread things wide and make sure that your trades make sense. Let's wrap up with a couple of points here. I appreciate all of you for being here. It means a lot to me. I know you could be off looking on Instagram or YouTube or something. Trade wide, not deep. Use much tighter stops. Trade stronger charts, gaps, and clean breakouts. Avoid false breakouts by expecting the first 20 cents or so above a whole number is going to be danger zone. So don't trade up there. Trade using your unrealized P&L. Feed the winners, starve the losers, find your edge, focus, and win. And my call to action, I've been running my live trading room since the year 2000. That's proof. This should now it should say 20th anniversary. If you want to join me, I'd love to have you try it out for a couple weeks. It's only $7 for 2 weeks at tradingtheopen.com. And it's only $97 a month if you stick around. And we meet 5 days a week, and I trade my live account in front of everybody's astonished eyes. So do take a shot at that if you want. It's www.tradingtheopen. I do live real money trades with the real money trading account. And it's been popular. I've been doing this for forever. So I appreciate all of you for being here. TradingTheOpen.com, that's my live room. $7, right? Hey, somebody just joined. Yay. Anyway, thanks all for being here. I don't know, Rob, if you're still around. If so, thanks, man, for being here. Yeah, you too, man. It's we only get to see each other like once every year or two, briefly online, so I appreciate it because I know you're busy. Available on Amazon for the low price of just $14.95, but not with Amazon Prime shipping. It's from somebody somewhere that they send it. I got lots of hats. I love hats. My wife is always, really, more hats? I love hats. It's a lost art. Nobody wears hats anymore. What's up with that? There's a lot of great hats. I've got a drill sergeant hat. I got fedoras. Anyway, I digress. Thanks, Rob. You're a rock star, man. So thanks for being here with me. And thanks to all of our listeners out there in the home studio audience. And we'll see you guys in our various services moving forward. So take care and best wishes. And Rob, take care, man. Say hi to the family and best wishes. Highly recommend Rob's YouTube channel. It's one of my personal favorites. I watch it every week. You have my word on it. The guy knows his stuff. So thanks for being here, and I'll see you guys next time. And thanks, Rob, man. It's all right. So, well, we'll see you guys next time. Take care. And thanks for all the kind words. I appreciate it. I know, Mike, I don't use level 3. I just use the time and sales. I used to teach level 2 based trading until decimals. Level 2 and level 3, despite what some people say, is largely worthless because it's a poker game and they step off their bids in their ass. So it's useless. Time and sales with the real money order flow is all you need. So anyway, thanks everyone. See you guys next time. Take care. And yeah, I'll get the video up to the YouTube channel and get the link out to you guys sometime in the next day or so. So bye for now.